We begin our coverage tonight of what's been called the worst financial crisis in modern times.
3 of the 5 biggest investment banks are gone.
Major sectors of America's financial system are at risk of shutting down.
The crisis created the biggest economic downturn since the Great Depression. We call it the Great Recession.
Its genesis can be traced to the U.S. housing market. A combination of greed and lack of regulation built the foundation for a house of cards.
The financial crisis grew out of a housing bubble that swept the nation in the early 2000s.
Real estate is a national obsession.
That's when Lissy Dickerson and her partner bought a townhome in suburban Maryland.
It was supposed to be a great time to buy a house.
I was thinking that, I could move here and get a house, get some equity going.
They say even though they had steady jobs and a down payment, their broker gave them an expensive subprime loan instead of a standard mortgage.
So if you need a lender who actually finds ways to make loans, call Countrywide.
We just didn't do our homework. We didn't know it was a 10% mortgage. And so found that out at the closing, actually. The realtor was like, don't worry. In 6 months, you can refinance that to like 3 to 5% and you'll be fine.
100% financing, even with a 575 credit score.
Designed for borrowers with poor credit, subprime loans had higher interest rates because of the greater risk of non-payment. Beth Jacobson was a top subprime loan officer for Wells Fargo.
Did I ever put people into loans that I didn't think they should be in? Yes. There was greed everywhere. The subprime loans made 3 to 4 times more than the prime loan, so our big bosses would come to us and say, what can we do to get more subprime loans?
When I got to the F.D.I.C., it was in the summer of 2006. This was the meeting where we briefed the president before we announced this.
Sheila Bair was chairman of the F.D.I.C., a government agency that regulates depository banks. She quickly realized that many people with these mortgages couldn't actually afford them.
We looked at all these mortgages. It was lunacy, and nobody was paying attention. We go, what the heck is going on? The party stopped when the housing bubble burst. Home prices started to fall. The people with these mortgages could not refinance them anymore. They started to default on their mortgages.
I don't have any options. I don't have the option to sell or to refinance.
I don't want to lose my house. I worked hard for this. It took me 10 years to get this house.
More than 1,600,000 subprime loans are in foreclosure or in distress.
These mortgages had been very profitable for banks. They were selling bundles of them as investments called mortgage-backed securities.
The whole thing cascaded because some very, very large financial institutions, not only had they been securitizing all of these unaffordable mortgages, but they had been investing in them themselves.
A big New York City bank has effectively gone under, and other banks are under close watch.
Lehman Brothers, a 158-year-old firm, filed for bankruptcy. Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
America's big capitalistic enterprises weren't supposed to be able to collapse in the blink of an eye.
This is going to be one of the watershed days in financial markets history.
And then the crisis began to spread to all the other banks and investment banks.
Not in generations has Wall Street absorbed the number of body blows it took today. Some call it payback for years of risky lending practices and weak regulation.
The stock market drops precipitously. You've got spending going down, house prices going down. All of these things are converging to bring the whole economy to its knees, which it did in a remarkably short time.
Within weeks, the economy began to crumble. Banks were suddenly unable to lend money to businesses around the country.
There was a withdrawal of credit availability in the whole economy. That really triggered an economic crisis, and that's when we realized something had to be done, something big, something dramatic, something immediate, to get credit flowing again.
We must act now to protect our nation's economic health from serious risk.
The government's top financial regulators, led by Treasury Secretary Hank Paulson, worked frantically to keep the economy afloat.
To restore confidence in our markets and our financial institutions, the federal government must implement a program to remove these illiquid assets that are weighing down our financial institutions and threatening our economy.
I want to be candid. This strategy will cost money, it will involve risk, and it will take time.
They pushed an unprecedented $700 billion bailout package through Congress to shore up Wall Street investment banks.
An institution may be too interconnected to fail or too big to fail. It is clear that some institutions, if they fail, can have a systemic impact.
The argument was a number of these players had become so large that even though they had acted recklessly, it would cause too much damage to the overall economy if they failed.
One of the key ways that capitalism is supposed to work is you're on your own, and you're on your own to succeed. And if you fail, that's your problem. But suddenly, when it was the biggest banks that were failing, it was everybody's problem.
The bailout was controversial, in part because it didn't include assistance for the millions of people at risk of losing their homes.
We were like, well, what about us? We're about to be on the street. Where's funding for us? I remember looking at the news and people were like out in the streets and like, we're losing our house. This mortgage interest rate has ballooned. We can't pay it.
The protesters who forced their way to Fannie Mae's front door today say the banks can't be the only ones who get government help.
They call it the American dream. Well, for us, it was the American nightmare.
I didn't lose my house then, but I was struggling to hold on because the payments were out of control then. So I had to file bankruptcy.
From the once sleepy backwater of the F.D.I.C., Sheila Beer has emerged as a powerful and sometimes lonely voice on behalf of troubled homeowners.
Until we get a handle on these foreclosures, we're not going to be able to rebound from our current economic problems.
Sheila Beer tried unsuccessfully to push through a foreclosure prevention plan for struggling homeowners.
It's not a silver bullet, but it would be a huge reduction in the foreclosures that you're seeing right now.
Eventually, the government set up a program that gave banks incentives to lower interest payments, but it reached only a fraction of at-risk borrowers.
The idea behind the program was for servicers to modify people's loans, but nobody enforced it.
By this time, Beth Jacobson had left Wells Fargo and was working with homeowners. She says mortgage servicing companies made it hard to get lower rates.
They would say, you know what, you didn't make your mortgage payment, you deserve what you get. Maybe your house needs to be foreclosed. You got more loan than you could afford. The problem was you were dealing with servicers that made money, more money, by not modifying the loan.
And not everyone supported the idea of helping borrowers, some of whom may have taken on more debt than they could repay.
The government is promoting bad behavior. How many of you people want to pay for your neighbor's mortgage that has an extra bathroom and can't pay their bills? Raise their hand. How about we all?
There just wasn't enough agreement about how to do it and willingness to really put the money and resources in to get it done properly. It was just too overwhelming. So yeah, I can understand why people feel government wasn't for them.
Perhaps the most controversial part of the bailout was that few bank executives faced serious consequences.
What that implies is that not only do financial firms have the right to expect a bailout, but they also have a get-out-of-jail-free card when something goes wrong.
The big Wall Street banks, they were bailed out, and their shareholders took losses, but they weren't wiped out. I think bonuses maybe were suspended for a year at the most.
I think the American dream is probably about, I don't want to say dead, but it's definitely on life support.
Lissy Dickerson says her mortgage interest rate has stayed high since the 2008 financial crisis. In 2024, after a disputed claim that she had missed payments, she lost her house to foreclosure.
So this is 20 years later, pretty much, on this nightmare roller coaster ride. And after all of this, struggling and fighting, trying to save this house, this is where I am. No savings, because all of my savings went into this nightmare.
I think we've turned the corner in terms of stabilizing the system, preventing a collapse.
For Wall Street, the recovery took just a few years, but for the broader economy, it took almost a decade. Overall, nearly 9 million people lost their jobs, and up to 10 million lost their homes.
They were successful in preventing a depression, but Wall Street came out much better than Main Street.
There are a lot of people that are still suffering mentally, emotionally, and financially. because of what happened to them.
If you believe that the outcome was as dire as people thought it could have been, then it worked and it was the right medicine. They felt like they had no choice.
We needed to intervene. We needed to do unpopular things. And so, we got through it. And it was difficult, but we did get through it.